Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone's doing great. I am stoked to really get this year going. Last week was a funny week because we're coming out of the holiday, yet we had, some significant data released. So if I'm thinking about when does the year start, this is the week. Although interestingly enough, we're going to end up with another bank holiday. What is it? Next week. Regardless, though, the end of last week, I don't want to take as a harbinger of things to come. Oh, it's up, up, and away from here. Just remember that if I take a look at the daily time frame, and that's the chart on the right here, we're still going back and forth within a range. We come down, we hit a Darvis support level, we bounce back up. You'll notice the multi-trend is still, for the most part, at least since the end of October, it's been mostly neutral. The most recent trend we saw, and it was very brief, was the uptrend that we saw right there at the very, very, very beginning of December. So there's a little bit of bullishness, but the biggest obstacle to the upside to get to really the bullish hemisphere, which we are not in yet, is we need to get above that 200 exponential. And you'll see that there with the white dots on this screen on the right. And that's what I've been keeping an eye on in terms of, when do we flip the switch to more widespread acceptance of this being a potentially more bullish market. And I'm talking specifically equities, right? I'm looking at the S&P futures right here. Okay, next up is, let's take a quick peek. And oh, where did I put that screen? I want to take a quick peek. Oh gosh, did I close it? At the I might have. Oh, there it is. I want to take a quick peek at the economic calendar. And here we go. Taking a look. This is Forex Factory. By the way, I'm going to show you one other economic calendar before we get into the questions, gang. So when we take a look at what we've got coming up this week, today is pretty quiet. Today, Jan 9, pretty quiet. Should make some nice clean air for some day trades, which I'll be doing this morning in the Sector Secrets Mastery in about, 17 minutes. All right, we go into Tuesday. Here comes Kapow, right? Here comes Kapow Jan 10, and then going into Jan 11. Again, pretty quiet session. Going into CPI numbers on Thursday. Gang, this could be a bigger hot zone than Kapow, because Kapow is going to express its opinion, but CPI is going to measure, it's going to grade where the Federal Reserve is in terms of that battle with inflation, all wrapping things up with consumer sentiment on Friday. One other calendar I would look at in tandem with Forex Factory is the trading economics calendar, because sometimes there are FOMC speaking engagements listed here that are not necessarily listed on Forex Factory. But the big calendar that I'm starting to look at more and more as we go into earnings season. I mean, we're here again. We're getting the earnings from financials. So now we're sort of officially in earnings season. And that means I'm going to spend a lot more time at Estimize, Estimize, estimize.com. And that's so I can look at not what hot zones are coming up this week or tomorrow, but rather scrolling way out, at the very least, to 2 weeks out, maybe preferably 3 weeks out, but preferably, I mean, this is where the setup, the ramp up is going to be best for us to scroll 6 weeks out from today, scroll 1 month out from today. And from that view, we can look at possible run ups with that much time before earnings, right? Because remember, as we close in to the actual release, implied volatility goes up, and therefore it far outweighs the buying of debits, like I like to do, directional debit, buying calls, buying puts. It starts to favor those traders who sell premium, right? So keep in mind, all right, which am I? Am I buying puts and calls, or am I collecting premium? In other words, I'm selling puts and calls. I'm collecting credit. All right. With that said, let's jump into the questions as always. Best part of our show, and kicking things off with Robert, who asks, like my opinion on my play. Sure. I entered Home Depot last week, 320 calls around 310. I like that. I like that. If I could nitpick, the closer to 308, the better. 310 is still gorgeous. In fact, 311 was the number. So you got a good number there. I'm up 8%. So far, my profit target is 325. Okay, which is just below the previous Darvis level. So what I would, my opinion, Robert, based on what I see, is we have an obstacle at 322 and a half. So maybe around 322 and a half, just move to break even on the option that you have. My initial target's going to be closer to 329. So I think that if we think about optional targets as ways to reduce risk, but still be very much opportunistic and look for a much more, um, well, much more ambitious first target, that's a really good way to do it. And that's how I would treat Home Depot there. All right. The only thing I would say, if I could just sort of, come back to that, is when we do trades in the sector secrets master, that's actually a very good trade, Robert. That's exactly what we look for, lower end of the range. But my only addition to that is I won't go out of the money. I do not advocate out of the money, and I don't know what your expiration is. So also, I can't fully say. What I would say is, if you're out of the money, we better have time. We have to offset the decay of the value, decay of the option with time then. So what I'd rather do is be at or slightly in the money. So that's the only tweak that I would say that I would make. All right. Okay. Next up is, how do I access the recording of my Sunday show and how soon does it use? Oh, Gordon. Yeah. So yesterday, my mom's back in town. So I went to go pick her up from the airport. And I did not realize, and it's totally on me, I did not realize it was right at the Raghee report time. So we did not have a Raghee report. But normally, the recordings, it's not a recording. We do it live. So the live show starts at 6:30 Eastern. And then the recording is available with YouTube pretty much immediately. So we'll be back on the schedule this Sunday. So yes, thank you for asking. All right, next up is, oh, and by the way, that show is visible on the Simpler Trading YouTube channel and my Raghee Horner YouTube channel. All right. Hey there, Aston. When will the daily price movement ranges, the DPMRs, be available? I actually am trying to remember when we start the webinars for my March 4 class. And oh gosh, this is why Trish keeps all this straight for me. I don't recall what date specifically the webinars are, but it will be available. Bot says the second week in February. So wow, pretty soon, but they won't be available till then. So second week in February, and that's going to be in front of the March 4 class that we have coming up in less than 2 months. Can't believe it's already right down to, feels like right down to the wire, but we're putting the, what is it, ninth month. Yeah, ninth month of hardcore stress testing, road testing the DPMRs. The first webinar is on, oh, there she is, February 15. February 15. So I believe right around then, Aston. Yes. Okay. Thank you for asking. All right. Next up, Praveen. Good morning. If I want to write covered calls against my holdings, can I please let me know based on decoding volume, daily, weekly, set up when to write without getting the risk of called away? Praveen, that's a huge question. So let me give you some basic guidelines for that, right? Because it's gonna be, first of all, everything goes back to structure, dictate, strategy, which I know, right? Because you took the volume decoded class. So the next thing you want to do is find the ranges within the V-score, because that's going to give you a pretty good idea of where your options that you're writing can be written. Ideally, look, can we ever guarantee that we're not going to get called away? Of course not, because we don't know ultimately where the markets are going. But we can use volume for an idea of what it has been capable of. So we can do that. And then the last thing I would make sure. So make sure it's a neutral market. Find the outer edges of the range, and then another thing you might want to do, which might be helpful, is one of the things that the bot does in the sector secrets room, and we're doing a little bit of it, mainly because members have been asking for it, which is at the very last 90 minutes of the trading day, are there opportunities for SPX iron condors? The reason I bring that up, I don't do that. But we have the tools, and the bot uses the tools to do that in the sector secrets mastery. And we're using volatility. I think Praveen, now that we have the ability to look at the daily price movement ranges, that could be another layer you could add. But since you've got the volume, use the volume, maybe even use the free Darvis to further identify the upper and lower ends of the range, find the volume high low range on the V score, and then go from there. That's the way that's sort of the pieces that I would go through. Mr. Walker says, see if your like buttons work. I like that, Mr. Walker. I like that. And follow up is silver. Sure. Okay, looking at silver here in terms of its trend, gorgeous trend, Mr. Walker, gorgeous trend. If we have an opportunity to buy a dip, we had it, right? Right there. Gen 5, Gen 6. Now we're moving away today. So today here at 24 and change, that is not where we want to enter silver. I'd rather enter silver a little bit more conservatively. But really, if you take a look at the 34 EMA on the high, that's where we want to either place an alert to consider options on silver or options on the SLV ETF alternative, or just place a limit order to buy at that dynamic value. Remember, with each new daily candle, the value of the 34 EMA on the high, the close, and the low are all going to be just a little bit different, because it is not a flat horizontal value, but rather it's a dynamic value. So I would look for calls on pullbacks. Absolutely. All right, next up, and I have some kind of weird. All right, there we go. Better. Hey there, Stephen. Newmont Mining? Sure. So Newmont Mining, remember, and I know you know this because you're looking at Newmont Mining and CCJ. So where is Newmont within the context of XME, GDX? I would look at XME. I would look at GDX. I would look at SLX. Not because Newmont Mining is a piece of all of those, but because when I'm looking at Newmont Mining, I do want to keep in mind, where is the attention in the metals? All right, where are our attention in the metals? My dog is laying in the sun, snoring away. I'm not even sure if this mic picks it up, but it's rather hilarious. Okay, so if I'm thinking about Newmont Mining and I do a stock exposure search, right, and I'm doing it right now just so I can get the specific data for you. GDX, almost 13%. XME, almost 5%. XLB, and I always forget that one too. XLB, over 4.5%. I would look in those groups as well to see if there's anything more established in an uptrend than Newmont Mining, but it's in an uptrend and it has taken out the 200. So I'd be open to buy the dip. Something I'm not open to on CCJ. Look at the structure. Not ready there. In fact, if anything, we could start looking at overbought, oversold, and possibly a short on CCJ. All right, next up, Robert, thank you very much for the opinion. I enter the 20 Jan expiration since I went out of the money, but we'll shoot close. Yeah, so Robert, if you're going to go out of the money, I wouldn't want you any closer than a couple of months, maybe 3 months. Yeah, so if I'm going to go out, way more time, because I don't like anything less than 30 days personally. And if I'm going to be in the money, then we have a little bit of latitude to be a little bit closer to that expiration date. All right, what time is the show on Sunday? Typically, the show on Sunday is at 6:30 p.m. Eastern. Yeah, so definitely something that we'll get back on track with. I enjoy doing that Sunday show because it even gets my mind sort of out of watching football over the weekend mode and into in terms of the shift to, all right, let's get back into the market mode. Yeah, that Sunday show is really good for me. And then I can go back to watching the Sunday night game. All right, next up is, let's see. Lorna Bot says the mic is pretty good directionally. Lorna Bot, you can hear the puppy snoring, and it's actually a cardioid, but that's funny. She's right next to me. I mean, she's right next to me. Oh my gosh, she's so adorable. All right. I love being here in the office and trading and I've got the cat in here too. So I got all the animals hanging out this morning. Right. Oh, you can't hear it. Oh, it only picks up me. Oh, okay, okay. All right. Let's go ahead. Gang, I haven't really gone through the broader averages yet. So let's take a couple moments and do that. Ultimately, what we have, and we had talked about this on Friday when we do our Ask Me Anything session on Friday. One of the things that the S&P did on Friday was surge into that last hour of the session. And when we have something like that, here's your Friday action. 1, 2, 3, right? We surge until maybe the last few minutes of the day, started to pull back at, yeah, last 15 minutes, some profit taking. Well, we see for the most part a really strong 60 to 90 minutes into that session. Doesn't matter if it's a Friday, but if we see a strong close, oftentimes we're going to see a little bit of follow through, at least into the clearing, which is the first 30 minutes of the day. And that today will be really no exception. It's not wildly higher, but it is mildly. It is a gap up, and it's a true gap at that. Meaning that on the S&P, yep, looks like on the Nas, not by much though. Not by much, but it is on the S&P, the Nas, and finally the Dow. We are opening above. You can see there on the Dow as well. We are opening above both the previous session close, which is sort of your vanilla gap, and the previous session high. So that's a true gap. I think that's more volume or market profile lingo, but it's just a different kind of gap. It's not just exceeding the previous session close. It's actually exceeding the previous session close. And in this case, because it's a gap up, high. So we'll see if there is a fade. We'll see if there's a bit of a fade on this, but not that I'm going to wander into the morning bearish, not at all. I don't want to wander into the market figuring let's just buy the open. Bad idea. We'll look for our day trades here in just a moment. But this is, for those of you that have asked in the past, Rog, what is this vanilla gap thing versus true gap? This is a true gap. Nice. Not by much, though. Not by much. All right. Let's see. Next up. Hey there, Tony. Are my books only focused on Forex? Tony, yes. When I got my book deal back in, oh gosh, I don't even remember anymore. Sometimes it feels like you ever look back on things you've done and it feels like a past life? That happens so much. And I think, gosh, I did that? When did I even do that? Hang on, I'll tell you for sure because I forget. This would have been, let's see, 2004. I was going to say 7. 2004, 2006, and 2010. Wow, a million years ago. Anyway, yes, I got a 3-book deal with Wiley based on Forex. I am a good Forex trader. I was recommended to someone, and then that got me my book deal. It was kind of neat because they came to me, so which was great. But that was a long time ago, and I feel like so much more experienced and accomplished a trader than, gosh, 2004. I almost laugh about the fact that that's coming up on 20 years ago. And so you'll notice, though, for those of you that maybe have flipped through it or whatnot, the basics of what I do is still based on the wave. That was the first book. The basics of what I do is still based on price movement ranges. We started introducing hourly and daily price movement ranges, this historical volatility that I use now. We introduced that back in January of 2010 with my 3rd book. So when I tell you that these ideas have been stress tested for sometimes a decade or two, You can see what I mean by that. So anyway, yes, they are in Forex, but price is price. And more markets are behaving more like Forex because we're influenced by global economic conditions. And slowly we're seeing futures embracing nearly a 24-hour type movement. So Forex thinking of macroeconomics, central bank activity, and nearly 24-hour trading, it's becoming, I think markets are starting to behave more like that. Therefore, those things that I did back in late 1999, 2000, when I first started trading Forex, it wasn't available in the US until then, by the way. And when I started trading Forex, those things are more applicable now in almost everything than they would have been back in 99, 2000. All right, gang. As always, thanks for all the questions. Thanks for being a part of the Caffeinate and Dominate crew. I'll see you tomorrow morning for tomorrow's charts and coffee. In the meanwhile, heads up. We're starting to wander we're starting to get into 2023, gang. Be good to each other. Manage risk. I'll see you tomorrow.